Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 12th of October. It's been a pretty positive week for markets generally. A lot of this has been around speculation on the possibility of fiscal stimulus in the US. Also, interestingly, in terms of the polls ahead of the US presidential election, it seems that Joe Biden is now the firm favourite. This comes with a plus and a minus. On the downside, it's likely that he will be raising taxes should he get to power, which obviously will have an impact on US corporates. On the plus side, it is also expected that if there's going to be wide fiscal stimulus reforms, it's likely that those will come in immediately after any such election. So it's all kind of been around the fact that the US economy definitely needs a shot in the arm. We had some more employment data showing that employment claims still remained at elevated levels. That being said, the market this week has taken the positive view on what the next few weeks might bring. As such, Dow Jones in the year to date is currently down just 0.4%, S&P 500 now up 6.7%, and the Nasdaq continues to power ahead up 27.3%. FTSE 100 has also increased by a couple of percent, but nonetheless remains down 20% in the year to date. So turning to next week, the US third quarter reporting season begins in earnest. As is traditionally the case, the banks will be kicking off that reporting season. So we're going to be hearing from the likes of JP Morgan, Citigroup, Bank of America and Morgan Stanley. And also this should provide some early indications in terms of what we can expect for UK banks, most of which are reporting towards the end of this month. In terms of UK companies, we're looking forward to a trading statement from Barratt Developments. Shares here have been under the cosh. They're down 28% in the year to date, although up 48% since the March lows. So any updates on whether the stamp duty holiday has had an effect will be looked out for, as indeed will their forward sales numbers and any potential mention of the dividend situation. Also, full year numbers due from ASOS, the online retailer, had a rather better performance. It's up 59% in the year to date and 412% since its March low. Obviously, in terms of the online retailing scenario at the moment, we'll be looking for their comments on the trading conditions and indeed their outlook for the remainder of 2020. And finally, we're due full year numbers also from the pub operator JD Wetherspoon. Shares here again down 45% in the year to date, although up 65% since its March lows. We'll be seeing whether the Eat Out to Help Out scheme in August had any positive impact on its trading conditions, while also considering what its current financial situation is and the impact of any further localised lockdowns. Thank you for watching. Have a great week.